We are almost 2.5 months into 2025 and I'm in a drawdown. If you watched my video early January, you'll know that I've been looking to buy the yen, buy the US dollar, sell the New Zealand dollar and sell the Canadian dollar. And that has really been my bias for the last 2.5 months. So since early January to now, almost mid-March. And it has paid dividends in the sense that I have had some great trades on yen pairs, on Canadian dollar pairs. I'm holding a trade at the moment, a short CAD SEK, which I've been holding for several weeks and is in a huge profit. You know, we're talking 1 to 14 risk reward. But the reality is I've also had a lot of losing trades. And if you were to look at my cash balance in my trading account compared to what it was early January, the start of 2025, I'm down. I'm in a drawdown. When you take into consideration my open positions, my CAD SEK, I've got CAD yen open, a pound New Zealand dollar long open, which is doing great, a euro New Zealand dollar long, which is also doing quite well. When you take into consideration all those trades, and there are others too, I am showing a profit, but it has been really difficult. The last 2.5 months have been very difficult trading, and I am in a drawdown. You know, if you look at closed positions, I've been in a drawdown for 2.5 months, and that will soon change once I close my open positions. I'll show a half decent profit for 2025, but up until now I'm showing a closed drawdown, and I've been in a drawdown, and this is the longest drawdown I've had for a long time. And part of that is because I started January with no open positions. You know, I start the year with a clean slate, and that kind of backfires. It has its disadvantages in the sense that I have no profitable positions open that I roll over. You know, the trades I'll be closing in March, my 1 to 14 CAD SEK and my other trades were opening back in January or February. You know, I don't have that in January. So that's part of the reason. The other reason is the markets just haven't gone my way. Even though I feel my fundamental bias is right, markets have been volatile, they've been choppy, and I've had a lot of losing trades. So it has been one of the longest drawdowns I've had for a long time, and it is difficult. But this is the reality of trading. I've made some notes, some things I want to talk about when it comes to drawdowns. If you're new to trading, if you've been trading for a while, you need to learn either way that these drawdowns are inevitable. You know, I've been trading for almost 15 years. There's nothing I can do to eliminate drawdowns, periods of drawdown. They will always come, no matter the strategy, no matter how you trade, no matter how much you risk, you will always enter a period of drawdown, and they are difficult. But there are things you can do. There are things I do to reduce the disappointment, reduce the negative trading emotions that come when you're in drawdown. Because when you're in drawdown, you will have thoughts like, this sucks. You know, and I don't know if I want to do this anymore. Am I ever going to make money again? And it's those thoughts, if entertained, that lead to someone giving up on their trading strategy. And that is the loser cycle, you know, that I've mentioned and taught and spoken about in previous videos. Is you have a trading strategy, you trade it for a while, you hit a period of drawdown, and you give up. You find a new strategy, you trade that, you hit drawdown, you give up. And so many traders are in this loser cycle. Well, how do you break that? I think the key is to reduce those negative trading emotions and thoughts when you're in a drawdown. it's not possible to eliminate the drawdown. We can't get rid of drawdowns. They're always going to happen. And even the best of traders can have very long periods of drawdown. And it is emotionally straining and mentally straining. But these are some things that I do, during these periods. This is what I've done the last couple and a half months to get through this dry season. Number one is to take a break. And I mean take a break daily, but also take long periods, longer breaks. So let me explain that. I didn't explain that very well. Having breaks daily really helps. Don't sit in front of your charts constantly looking at the charts. Have a break from the desk, just getting out, going for a walk, going to the gym, playing some video games, just doing something else will get your mind off trading and will really help. Also have longer periods of times you're not trading. So at the weekend, don't look at the charts. Don't look at the fundamental analysis that you have. Just have a complete break from trading and refresh yourself. And if things are really tough, then maybe just have a break for a week or at least a few days. Get away and do something different. So that's number one, is to take a break. And I think the most important one really is to take breaks daily. Every day, have some sort of break. Go and do something different. It can really refresh you. And mentally, it can reset you. That is my experience. Anyway, number two, reduce your risk. Okay, so we can't avoid drawdowns completely, but we can actually minimize the depth of a drawdown by reducing our risk. If your backtesting shows a potential drawdown of 15%, then if you reduce your risk by half, that should be 7.5%. So reducing your risk should reduce drawdowns, not the amount of drawdowns, but the depth, the seriousness of those drawdowns. Reducing risk also reduces trading emotion. So risk and emotion go hand in hand. The higher the risk, the higher the emotion. So reducing risk can also help with those other trading emotions, fear, greed, boredom, those sort of things. Third thing that I do is to try and think longer term. So even though the last 2.5 months have been pretty pants when it comes to closed positions, and I have had a number of losing trades, I'm actually trying to think of the year. I'm not trying to think of January's performance or February's performance or Q1 performance. I'm thinking about 2025. Am I going to show a good return for 2025? So having that longer term perspective can really help. Try not to focus on short term. If I was looking at my results on a daily basis, a weekly basis, even a monthly basis, it would make me incredibly emotional because you're trying to control these things. And my results day to day aren't actually very good, so I would just feel awful about how I'm doing. But longer term, if you take a step back and think and look longer term, things aren't as bad as you think. This 3-month period, say, or 2.5 month period that I'm facing in a drawdown, at the end of 2025, if I'm showing a healthy profit to 2025, those 2.5 months are going to feel like nothing. And on the equity curve, it's just a dip in the results. That longer term perspective is a real key to getting through these drawdowns. If you're trying to focus too short term, you can't see the wood through the trees. Number 4, change your expectations. And I've gone through this a number of times in previous videos. Too many people have the wrong expectations, even though they may understand that there are drawdowns. When they hit a drawdown, it's unexpected, and they get emotional. Expect to have drawdowns. Expect to have long periods where you don't make any money, whether you're losing money or a break even. Expect your strategy not to work all the time. Expect that you will make money, but it will be longer term. So these 4 things, as well as other things, but these are the 4 things that really make drawdowns bearable, because that is the key for me. Like I said, we can't avoid drawdowns. They're inevitable. It's just trying to make them bearable. How do I get through this period and carry on trading? Because if you give up, you're stuck in that loser cycle. If you give up on this strategy, you're just going to give up on the next one and the next one, because you're always going to hit a period of drawdown. I think also, don't be too hard on yourself. It's natural to be disappointed. It's natural to get frustrated. It's natural to want to make money. And when we're not, it can be stressful. Those things are natural. So don't be too hard on yourself. What you need to do is put things in place so those natural feelings don't start actually impacting our trading. We start risking more, or we give up on our strategy, or start modifying our strategy. That's the danger. The feelings themselves are not dangerous. It's what we choose to do with them. Okay, thanks for watching another video, and I'll speak to you again.